In this video, I want to lay out my thesis that 2024 will be an extremely strong year for the stock market. When we look at the charts of the S&P 500 and Nasdaq Composite, we can see that they have both rallied sharply since bottoming in 2022. While some may be worried that they are extended, a quick look at the higher time frames of the weekly and monthly charts help us see that these large bases that are being built on the indexes are offering enormous potential. This is one of the reasons why I believe the market is poised for a strong 2024. The S&P 500 and Nasdaq both yielded healthy returns in 2023, but individual stocks, especially smaller cap names, didn't really start to move until later in the year. This can be easily seen when we compare the QQQ and Russell 2000. However, it is now looking like participation is starting to broaden out, which is an extremely bullish sign. While 2023 saw names like Nvidia, Apple, Microsoft, and Google thrive, it's great to see other names rally, as this indicates that funds and institutions are starting to expand out their positions to riskier names. In addition, while they lagged in 2023, IWM, IWO, and FFTY are now starting to pick up and are just starting to form stage 2 uptrends. With the Fed signaling it will most likely stop hiking rates and instead eventually shift towards lowering rates, it appears investors will not have to fight the Fed in 2024. This is bullish news, as an environment of rising rates can make trading growth stocks extremely difficult, as they often need to borrow money in order to fund their growth. However, a dovish Fed policy is likely to benefit these same names. This is why we started to see major accumulation coming into names like Monday, Zscaler, Affirm, and Palantir. We've also seen Nvidia and SMCI act like true market leaders, an indication that major funds and institutions want exposure to stocks they believe will benefit from the AI revolution. A long-term margin debt indicator has also flashed a major buy signal. With everyone chasing high interest rates for CDs and saving accounts, there's a relatively large amount of money on the sidelines. This usually happens at major opportunities, as we can see on the chart. The average person is really not interested in the stock market at this point. I'd say on our sentiment cycle, most people are in the doubt or interest area. Again, the average person believes the correct decision is to place your money in banks to capture higher interest rates. While some may be in the greed phase, the market on the whole is by no means near euphoria, and we are certainly not at panic or capitulation, which took place in late 2022 and early 2023. It is also important to point out that the major event and focus of 2024 will be the United States presidential election, which is looking like it will be a rematch between President Joe Biden and former President Donald Trump. From a trading perspective, I do not believe the outcome of the election will have much effect on the stock market. Remember, we've seen bull markets under both Democrats and Republicans, and I've learned that not even a world war can hold back the market if conditions are bullish. From a longer-term view, I still believe that the 1990 versus 2022 bear market comparison I blogged about a few months ago still holds some weight. Also, I'm very bullish on Bitcoin in 2024. If you missed that video, you can watch it here. When you put all of this together, the possibility of a roaring 2020s begins to make a lot of sense. While I may have a certain outlook for the market in 2024, I know that opinions are often wrong, but markets never are, as Jesse Livermore would say. I can assure you that I will bend with the market when it bends and quickly throw out all my projections when the market signals to me that I was off track. But one thing I won't be throwing out is my risk management, as it's the only thing that will guarantee that I'll still be around to trade in 2025. Risk right. Sit tight.